All right. Hey, trust you are doing well. Love that picture, man. Love this country. The USA is the greatest country on earth. But what are we talking about? What are we looking at? What's taking place this week? Just want to share with you a couple of things, looking at the current evaluation of the marketplace, commercial real estate, real estate investing in general, as well as interest rates. We take a look at, some of the big news, of course, from this past month. Blackstone just bought another $2 billion worth of distressed commercial loans, primarily on apartments and retail from, I think it's Atlantic Bank Shares, regionally based out of Virginia. But again, so those are a portfolio of loans that are under distress or default Blackstone has purchased. Now, again, if you're following or talking with anybody that's, reflectively honest about the current conditions over the last couple of years, there's definitely been distress in the commercial real estate market driven by a number of factors. Chiefly was the interest rate spike of 2022, where the Fed raised interest rates the fastest, the highest, the furthest, and maintained it there the longest that we've seen in 40 years. And so that had a dramatic impact on a multitude of different commercial real estate, apartments, retail, some industrial, office buildings for sure, coming out of the pandemic as well. So, that's a reality. The other thing that if you look at too, inflation spiked dramatically, in 21 and in 22. Costs have gone up demonstrably, both for salaries, basic overall materials, all these components that are injected into maintaining, operating commercial real estate. And then on top of that, probably the third, leg of it is insurance spiked dramatically in many, many areas, because of all of the different events that took place with, hurricanes, fires, just all of it that impacted the companies or country. And so you see that's taking place in these areas. So what does that mean? Again, okay, so it's presented challenges in the last couple of years, but again, with challenge becomes opportunity. You're starting to see that now in the commercial real estate space where the distressed projects are presenting themselves. You see companies like Blackstone and others that we've shared about that are beginning to move into the space of purchasing either directly commercial distressed properties, or like in the instance of last month, Blackstone buying, the underlying loans. What they're going to do is they will, work out a take back with those properties is the underlying thesis that they'll do, take the properties back, and then, move forward with the injection of capital, stabilization, operation of it, and then operate them over the years ahead, and then exit, whether that's 5 years from now, 3 years from now, or 10 years from now, depending on their business plan, and make a substantial profit. So I'm saying that because we're also seeing, next week the Fed's meeting and they're going to cut rates by 25 basis points, fairly well given. Some people talk 50. I think it's more realistic that's 25. It's also likely that depending on where the numbers land, again, in December, they will do the same. So we're starting to move into a period of time where interest rates will begin to be on the decline. Again, the bond market, may not follow in suit just as quickly as we've seen. The 10-year treasury was just under 4% as we were shooting this. But so what does that mean, right? It means that distressed opportunities present a great opportunity right now at this moment in time. You've got limited construction of multifamily apartments because of the interest rates. It's the lowest starting point that it's been, pre-pandemic. So that's good for demand, meaning there's less new product coming into a variety of markets. You've got distressed opportunities that are coming in where, realistically, we've already begun to see things happening 30 to 35% below the peak pricing of what's available in 21, 22. And then you have an environment also where you have a likelihood that interest rates are going to moderate or decline. And then you also have a shift of more capital that's coming into the marketplace. And then coupled together, like with the Southeast, it's still one of the strongest in-growth migrations that are taking place in the country. So that means increased demand. So those are all positive things. There's still some opportunity and necessity to work through some of the challenges that are taking place. Not everything that glitters is gold, meaning just because it's distressed doesn't mean it's a good buying opportunity. We've looked at tons of stuff that we've passed on just because it's not the best location or situation, or things of that nature. So I just encourage you to, though it may be or feel a little unpleasant because of the distress, that also is what presents opportunity. So have a blessed and victorious week, for this is the week God has ordained for you.